The Edgeless Horseman here. It's January the 20th, 2025. First of all, thanks to the sponsors. In this video, I'll mostly talk about the current mania and some investing concepts that I think is really important to consider. I thought I would talk about a bunch of companies that have news or are interesting at least, but I mean, I gotta believe that I'll just keep ranting about investing so long that it's will be no time left over really for many companies. Not in this video, but let's start off. It's just after midnight here in Sweden. Mel's futures up, down a bit, but I mean the real action last 48 hours has been in crypto. I mean, we live in the craziest of times. We really do. People have probably already heard about the Trump coin, which literally reached 70 billion in I think 24 hours. And shortly after that, like some hours ago, Melania launched her own meme coin. And it's like, hey, to be fair, I mean, that's the interesting thing and also the degenerate thing about what we're seeing now. It's like at least some are, well, I shouldn't say some, it's like there's a lot of meme coins out there. But I mean, when you label it as a meme coin, I mean, then you're not, at least you're not pretending it has value, right? I mean, you're not trying to sell like it's digital gold or anything like that. It's simply, you're launching a joke. You're launching something that has no intrinsic value. It's a meme, a joke. It's like no productive assets, no utility at all. It's a joke. It's a trading sardine. I mean, that's the funny part. It is literally a trading sardine. I mean, crypto is the perfect version of trading sardines. Anybody can kind of trade it at any point in time, even at weekends, yada yada. There's no, I mean, unlike trading sardines, that there you at least had, tin cans and whatever. They could rust away and stuff like that. I mean, this is just ones and zeros. And the funny thing is, like, when you think about it, okay, meme coins, if it is a trading sardine, I mean, the only merit of trading sardines is simply, again, the greater fool theory. The ones that are going up, those are the ones you would want to be in, or the ones who are going to go up a lot, and vice versa. So it's just kind of sick situation where it's like whack-a-mole. What trading sardine is currently going up? Then everybody jumps into that. Then everybody jumps into the next one. I mean, it's absolutely crazy. And that's, I guess, why you could have a thing like Trump coin reach 70 billions in 24 hours. It was simply the best momentum trade at the time, and it went up like 7,000%. But it is absolutely crazy. Another thing, I watched Jeff Gundlach presentation. It was uploaded, I think, a few hours ago. I put it up on the site as well. I mean, this is one of the slides he has. Consumers' expectations of higher stock prices. I don't know what date it literally, topped out at, but that's pretty crazy. I mean, this, I guess, is like the peak of the dot-com bubble or something. This was, I don't remember what actually happened here. But it's absolutely crazy. This is, in a sense, everyone is basically bullish. Financial markets, I was going to say, stocks. And they're not even cheap. They're not even cheap. I mean, that is the funny thing. One would expect, I mean, in a, let's say a rational market, okay, what should you expect, let's say, to see higher stock prices in? Things that are undervalued, things that are cheap. But that's obviously not what happens in the markets per se. I mean, almost everyone is a momentum trader, and the stock markets are the U.S. markets are basically at all-time highs. So I mean, this I think just kind of goes to show that again there's maximum interest near the highs. When something has gone up for whatever 13 years straight, people can still think that this is literally the best time to buy. And you know, you have Magnificent Seven or whatever they're called. They're holding up. I mean, they stood for the lion's share of the actual returns and all that. But it is simply fascinating. I mean, this is never, ever, ever, ever gonna change. This is why it's like psychology, cycles, and all of that is so important because industries might change. Uh, Innovation changes industries, obviously. There's new technology, there might be new sectors, like, hey, crypto, for example. I mean, that's a new thing. But human psychology never changes. You see the same thing. So that's why I think, again, it's like I have been, whatever, benefiting from my background in poker, for example. I think, at least, because there was both psychology and probability involved. You were trying to think or figure out what your opponent was thinking and how he would react to certain things and what you should do to make him think something. If I mean you think if you want him to believe that you have a particular hand, let's say. I mean the classic one is like play weak if you're strong, play like you're strong when you're weak, and make him adjust to that and make the wrong decisions. Yeah, I mean, again, psychology is like that's why I actually like let's say all the stocks you're down in, or I mean. Some shorts are really bad, for example. You can typically you can kind of figure out why it happened, and usually it has something to do with a story looked promising, sentiment was high, so it went up a lot. With expectations were high, the stock price had been doing well, so I mean, and that's kind of enforcing the idea that this story is doing well. And then let's say something happens, the discovery is not as good as everybody hoped, and it was already pricing in a fair chance that it was going to be, a world class discovery. That doesn't pan out. We go into a bear market, money goes away, so you have one of the, a very high flying, popular story that up until that point was getting better and better, let's say, in perceived value. The market was ready to take risk and price in a future that it hadn't happened yet, and then it's like a few years later, like we've seen, I mean, or last 4 years or 5 years, uh, you have the complete opposite: higher discounts, more risk aversion, less money, which means less news, which means makes it even more boring. And then you have increased dilution because the stock price goes to lower levels and they try to whatever create some news, so they raise money, but nobody wants to raise money, and everybody's whatever feeling down because the share price is down. So I mean, there's a lot of stuff happening out there in the sector, especially in the markets, especially in this sector, where you can kind of figure out what went wrong or what explains that share price. Because I mean, stuff can be down 90%, and it's I was gonna say a lot of the times like people, like I said before, immediately jump to that was a scam. Anything that is done more than 70% from the highs is always a scam in some people's eyes. But that's I think a lazy way to go about it. It's just that when you actually factor in this cyclicality of the business, investor psychology, the effect of increased, let's say, dilution, the effect of increased boredom, etc., and let's say lower metal prices or whatever. When you have all those factors coinciding and they feed upon themselves, so it becomes like a perfect storm or a negative spiral. Then you can understand why some stories that have not maybe changed that much in terms of geology or whatever, it's like perceived potential in their whatever project, they can still be down 70 to 90% without it ever having been a, let's say, scam. I mean, I so far I've never sent an angry letter to a single management team. I don't bitch and whine. I don't consider myself, let's say, scammed. I mean, there are some stories where it's like, in hindsight, or some information, gets put forward where it's like, oh, they were. I'm not gonna say scammers, but it's like very, let's say, unserious and maybe kind of fleece the company in a sense. But even then, it's like, okay, then I just chalk it up to I should have whatever researched the management team better. I always assume I can fix something. There's a, let's say, a lesson to be learned, because if I always say it's like, hey, every time I own a stock that goes up, I'm a genius. Every time I own a stock that goes down, which happens a lot of time. I mean, when I start buying something that I think is cheap, usually it goes down maybe 50% before it actually bottoms out. So when I think something might be very cheap, it could get extremely cheap before actually the bottom is in, for example. So you're going to be especially if you are a value investor, let's say, in a cyclical sector, you're going to be down on a lot of stocks. I mean, most of, unless you tick the absolute bottom, you're going to be red in basically all your holdings at some point in time, or all your buys, might be better put. Uh, so that just comes with the territory. It's like, am I getting scammed every time I lose money in a high risk, high reward sector? Of course not. I mean, a lot of the time, insiders are losing more than we are. Would they be scamming themselves? No. I mean, skin in the game is important, but I just want to point out it makes little sense for somebody, if you have a lot of skin in the game. Why would they be, I mean, unless they offloaded, of course, uh, going into whatever a pump, or it's like, you can kind of tell that it was just to cash out in a sense, around the pop, and there's like no intentions of really making it work. So then I can see that as being kind of a scam, but otherwise it's I just assume there's like, okay, yeah, okay, I stepped on a landmine, let's say, I have to do better. I get kind of pissed off at myself. It's like, I should have predicted this, or I was too lazy about it, yada yada yada. Thankfully, I mean, most of the time, I mean, I've lost, probably, yeah, I'm pretty sure I must have, lost on more stocks in this space than I've made money on. Thankfully, I mean, most of the time when I let's say the management team is horrible or something like that, where it's like, okay, this is almost like a scam. I mean, typically I haven't had big positions in that. I mean, I don't know what my median size position is right now, maybe 0.5%, something like that. And it's the stories that I research very well, where I have a high conviction all that they are typically uh, much bigger in size. But I don't think I've ever been, quote, scammed in any of my large positions. kind of a high conviction stories. I mean, uh, there was management screw up in, like, I mean, if we rewind the tape, it's like White Rock. I had a pretty big position in that, and yeah, I mean, I don't think they ran it well, and I mean, they later literally went bankrupt. Condor is a more recent example, but that I don't even I don't even regret that bet, even though I think it was the biggest paper loss in one day in money terms. Uh, but I didn't. I mean, that was a fat hit. But I didn't really. I think that, yeah, that's probably my biggest loser over the last 2 3 years. Uh, but I had no problem sleeping that night. Because again, I can't just look at the result and say that was a bad bet. I mean, if they would have hit on the maiden drill campaign, and it's not often I bet big on a maiden drill campaign, but that was, and I've talked about why I did that. I can see myself doing the same if the same context gets presented to me. Because let's face it, if they would have hit, and make a kind of a Pierina type discovery, I mean, that stock would probably be at least up 600-800% or more, instead of going down 60%. And of course, if that would have happened, I would have said the opposite. It's like, oh, I didn't have enough of the stuff, and that's what you never know. That's why it comes down to probability and position sizing and risk management, because you literally never know what stocks you are 100% gonna make money on. And of course, you wouldn't own a single share in a single any individual company if you didn't believe there was a chance or even a good chance that that would look cheap in time. I mean, we literally obviously don't have a single stock or share position where we think it's gonna go down, in a sense. And still, like, let's say on a average day, I might have. I mean, if I'm looking past whatever 8 years, I might average, let's say, 30 positions, somewhere along those lines. Sometimes more, sometimes less. But it's like I just assume that I think at any one time in point, I'm probably down on more than 50%. And I obviously, if I knew that, I would obviously not have bought them, etc. But in the end, it makes or it works out, because there is, the reward side is infinite in a sense, and the risk side is always 100%, unless you're using leverage, which I never do. So any one case can obviously pay for a bunch of losers, especially if let's say you have a bigger position, which tends to coincide, for me at least, and I think that's the way to go about it, with the perceived risk of permanent loss. If that makes sense, because it's, I mean, if you have a big position and you make 100% on that, I mean, that might pay for 20 small positions that go down 50%. And I don't want to, especially at a time like this, I don't want to. I mean, when the next big move is up, the sector-wise, I mean, the next big move for this sector is going to be up by definition, because we're at extreme undervaluation. So again, the big swing, the big play is to be along for the next big sector move, which is up. Then staying power, I'm going to get to that later. Staying power obviously becomes very important. So I would almost consider it, not almost, it would be considered way too greedy if you found the cheapest, let's say you find a pre-discovery play selling for $1 million. They have the best possible target you could ever find, without actually having, let's say, the assays, but huge soil anomaly, let's say even outcropping mineralization, geophysics that backs it up. even if there was, I mean, best looking target ever, so it's like, I don't know, let's say 30% chance of success. And if that 30% chance of success happens, that stock from 1 million could go up, let's say, you know what, heck, 500 bagger. I'm obviously, this is a hypothetical case. I don't expect to find the best possible pre-discovery target to be valued at 1 million. But in that sense, it's like, yes, at its face value, it's like, wow, okay, you can buy this for $1 million because the sector is absolutely depressed, because retail doesn't give a shit about juniors, and that story should be valued at I don't know, 50 million already or something like that. So it's like hugely undervalued. It's like should be trading multiple higher than it's trading at. It would be still be way greedy to like, I'm putting my entire portfolio or net worth in this stock in the chance that it might become a 500 bagger, because the next obvious move is up for the entire sector. So let's say in this case, I mean, when it's trading at 1 million, it's almost impossible to go down more than that. But let's just assume that if the 70% risk happens, you're gonna lose everything. So that feels kind of greedy. It's like, you can make with a diversified portfolio some, at least basic due diligence and just, a lot of patience. You could expect to at least make, let's say, 300% until the next meaningful sector top, like intermediate top or something. That's a lot. Even if that would take 5 years, that's a really good return in 5 years. But you're risking that if you're, aiming for the maximum potential reward. I hope that makes sense. But let's look at some shenanigans. I mean, this is Peter Schiff. It took Bitcoin 8 years to reach a 72 billion market cap. Trump did it in 2 days. Trump is worth 50% more than Newmont, the world's largest gold mining company. It's up 40,000% since Friday. It's clearly a much better store of value than Bitcoin. Trump is in who did. I mean, obviously, he's being facetious here. But I mean, to his point, he has a point, which is like everybody uses price as, I mean, I've said this before. I don't think Bitcoin being at 1.8 trillion, I don't think that's proof of Bitcoin's staying power. Why? Because you see stuff like this right now. A literal meme went to 72 billion in 2 days. Dogecoin has been to 70 billion, and that has also, I mean, it's like I said before, even the creator said this was made as a joke. There was no utility other than that, yes, if you could buy that stuff. So it is the definition of a trading sardine, Dogecoin, definition of a meme coin. So if that can reach 70 billion, yada yada. So if you just look at price or whatever, I mean, he's obviously pulling the legs of Bitcoiners here. One thing I would like to say about Bitcoin is like Bitcoin maximalists, for example, that there are those, let's say, Bitcoin maximalists, and let's put Saylor in there, where it's like there is no second best. So if Bitcoin is the only thing that is worth owning, the only thing that has value, and to that point, I saw or someone linked this to me or sent it to me. As of November, this is 2023, there were more than 2.4 million cryptocurrencies according to CoinMarketCap. This is a 5-4. Okay, I don't know what the number is now. Let's say, I don't know, let's say 5 million different cryptocurrencies. 5 million different cryptocurrencies. So if the Bitcoin maximalists, let's say, are right, like the sailors, the Max Kaisers, for example. I don't know, maybe he invests in other stuff too, but I think he's like Sailor, a high priest of Bitcoin. That by definition then means that the 5 million other coins are worthless, and will, unlike Bitcoin, they will reach their intrinsic value of 0 at some point in time. And my take on that is like, okay, imagine you own Bitcoin, or you have a car or whatever. You're in a car park and there's 5 million cars around you. And obviously, let's not pretend that every Bitcoin holder is like some savvy investor or anything like that. Let's take it as, it's mostly retail. Okay, you have a car, you're sitting in your car. You think that, at face value, or you say right now when the car park is whatever, somewhat, it's like the cars around you, you can't see anything special. But fast forward to a time that if you're right then, that yes, Bitcoin is the only thing of these cryptos that actually has value. So you're sitting there in your car, and all of a sudden you see 5 million cars around you. As far as the eye can see, all of those cars spontaneously combust and catches fire. Would you just be sitting there? It's like no problem here. It's like that meme with the dog sitting at a coffee table in a burning building, and it's like, this is fine. Just look at how the market functions. If you have whatever 30 juniors, something happens. All the 30 or 29 juniors drop by 95%, and that's, let's say, sector-wide. Do you think the one that, let's say, for all intents and purposes, should not go down? Don't you think that's going to go down? Or let's say you own 100 juniors, they're all drilling, they are all putting out the maiden drill results on the same day. 99 of them come out with a really poor return. They drill dusters, they have no money left. So basically, for all intents and purposes, let's pretend that the value of those juniors are zero. And there's one, let's say, that haven't put out the news, the results yet, or let's say that's not actually a drill play, it's the only junior that actually has a project. Let's put it like that. Do you think there's not going to be any selling in the 1 out of 100 that's not down 99%? No friggin' way. That would get slaughtered as well. That's why even people are, as always, worried about a sell-off in the miners, because the market is gonna shit its pants. And then we're not even talking the mining sector, it's the overall market. So people are worried about collateral damage from a sector, even if, let's say, gold price goes up, they still expect the miners to get sold off, because that's what markets do. So in this view, it's like, on what planet does Bitcoin hold its value while 5 million other cryptocurrencies don't and go to zero? I think there's almost zero chance of that happening. And if that's not correct, that Bitcoin is not only one that has value, there's going to be a lot of cryptocurrencies that have value. Crypto is here to stay, it's the future and all of that. Well, then Bitcoin is not even going to look unique, because let's face it, if I just want to transfer money across borders, whatever, I could as well buy a stable coin, I could buy Doge, I could buy a Trump coin, whatever, and any one of those 5 million cryptos, if I just wanted to, transfer money. So it's like, to me, nothing really makes sense, but I guess that is obviously not everybody's part of every bubble. It's like not everyone, unlike Michael Saylor, went totally bonkers in the 2000 IT bubble. He did. So it's like his track record for spotting bubbles is obviously not that good, but people still herald him as this, great investor. And yeah, I've already heard stories about people going all in Trump coin and making fat bank, and it's like, it's from the top, it's down, I think, or went down 60%. So if you're up 4,000%, all of a sudden you're up, what, 1,600%? It doesn't sound like a lot if you say, oh, it's down 60% after being up so much. What is 60%? less, but still, I mean, if you held it to the top and you're sitting there with, let's say 4,000%, it goes down 50%. I mean, that's 2,000% less than you had, 6 hours earlier. So I mean, stuff can evaporate like that. And the thing is, with who in their right mind would go all in Trump coin? I mean, the one I heard a recent example from a friend of mine who had a friend of his friend or something along those lines. That was a person that really didn't have any money to begin with, but he had made I think 2 all-in bets in crypto in a row. I think they both so far were winners, and that included Trump coin. So he made I don't know how many times his money, but that's the problem with going all in. You have to be lucky every single time. It's like in poker. I mean, if I went into a poker table, I took my whole bankroll, played one hand, went all in. If I won that, I double up. Okay, 100%. So I'm up to whatever, $200, and then I bet again, double up again. Now I'm up to $400, and continue like that. I mean, you could theoretically you could win all the money in the world in a sense if you keep that streak going. The problem is that you only need to be quote unlucky once, and it doesn't matter if you were right or won 16 or 100 hands in a row. When you lost, if you lose 101st hand, you're wiped out. Doesn't matter if you were up 10,000% up until that point. If you bet it again, you're gonna go down. So that is the problem. And obviously, I mean, the stories you hear about, I mean, no sane person with money that's like, no, I was gonna say, no sane person that is actually made their money from investing whatever would obviously go all in on a Trump coin, for example. That is absolutely absurd. So the stories and the people who do that, and you hear about it, they're obviously the ones who are just absolute degenerates when it comes to risk. So the question is then, if you think they are gonna keep that up and end up, walking away from the table with a fat win, I mean, the odds of that are slim to none. Basically slim to none. Easy money is like it's like a drug. I mean, that's one thing. When I started playing poker, for example, I think that was in 2009. I mean, wasn't really good at it, but I had, I mean, over a week or two, I actually had I was on a heater. It's like I probably won more hands than I should, etc. I think I made $3,000 or something. That was all the money in the world to me, since I was a poor student at the time, and that had me hooked ever since. And I'm not even sure I was, let's say, a winning player for the first, couple of years, let's say. It wasn't until I actually couldn't afford to lose, after I was, recovering from my illness. That's when I couldn't literally afford to lose. Then I started to play extremely disciplined, and I had an amazing win rate, and that's the money I used to get into to invest in miners. My point is that if you start winning in the beginning, and even Rick Rule says that, when he got into the mining space, it was, I think he got in early in a bull or something, and as he said a lot of times, he mistook a bull market for brains. So you get hooked, and you start to think that it's this easy, and obviously you start to price in that it's just going to go higher and higher. I mean, I know one guy, a young guy, he was in he owned almost, like 2 or 3 stocks, some of the hottest stocks in Sweden a few years ago now. And when one of those stocks had gone up, I don't know, 800% in like 2 years or something, and the other one was in a similar space, so there was a lot of overlap, that a lot of people that made money in one of the stocks bought the other one because it was smaller, you know what I mean. he decided to retire and live off investing. He thought he was ready for that, so he quit his job. I think that was the very same month that stock peaked and then went down 50% over the next 2 years or something. So he had been making ridiculous, not crypto type returns perhaps, but he was printing money. And I am pretty sure he even used leveraged with his concentrated portfolio. Like he owned like turbo warrants, turbo warrant longs on alongside his ownership in said companies. So he was obviously feeling like a king for a while, and then when they had gone up and were pricing in that this good past is going to continue and the future is going to be as good as the past, that's when he thought he was ready to quit his job and live off investing. That marked the top. And I think he basically not long after that he stopped tweeting and all that. So I have no idea how he's doing nowadays. But that's the kind of thing you see. So it's like he was taking in a sense insane risk. After the move it's like imagine that juniors go up 500-600% from these levels, and you've been making back. I mean, everything looks easy. It's like you find stock, you think it's good, you tweet about it, it's like people jump into it, it just goes up and whatever, and you start to like believe that this is how easy it's always going to be. It's the opposite of right now, where it's almost like you felt for the last 4 or 5 years that, I mean, you can't even win if you win. I mean, even if you think the news is going to be good and it is good, you don't get any real, let's say, immediate gratification, because the market doesn't care about the news. Nobody reads the news release, for example. But again, it's easy money is addictive, and this is kind of funny. I mean, this is I don't know where I found it, but I saved this during Weimar, and this is obviously during the Weimar Republic, famous for the hyperinflationary bust and a bunch of like degenerate stuff. During Weimar, the German population started to speculate in stocks. From When Money Dies, that's a book. Speculation on the stock exchange has spread to all ranks of the population, and shares rise like air balloons to limitless heights. The population was now engaged in evading taxation and devoting their money to speculative purchases. Shares in the respectable concerns. So this is basically, I take this as like blue chip companies, like actual businesses at least, which had paid 20% dividend, which is like unheard of today, which says something about, let's say, the valuations out there, whilst consumer expectations of stock prices going higher is at an all-time high. Shares, were pushed higher and higher till final holders could not expect a return of even 1%. That is kind of crazy. I mean, if you think about it, first of all, this was super cheap to begin with compared to today's standards. But, so this is like, the upper limit, let's say, of that mania was when I'm assuming it means that the dividend yields, the stock prices were pushed up so much that the dividend yields went down to 1%. I mean, there's a bunch of companies today that I don't know whatever Costco and McDonald's and Coca-Cola give out in what their dividend yields is, but I would think they're around 3%. So I mean, it's not outrageous compared to today's high valuations, but that was like the peak, let's say, of that mania. That 20% dividend yields went down to 1% because the stock prices rose so much. Okay, compare that to today. We have literal memes, jokes that reach $70 billion, $70 freaking billion with zero fundamental value. I mean, 70 billion, that's got to be like the GDP of some African nations or something, with zero fundamental value. There's no dividend yield here. There's nothing underpinning it. There's nothing you're missing out on. If it goes to $1, I mean, there's nothing that you're picking up for cheap. And that's the beauty. I mean, in a sense, 2025 is infinitely more degenerate, but that's the beauty of crypto. There is no value/anchor. They are pure trading sardines. At least here, there was some underlying business value, some underlying revenue stream, underlying dividend. So you could see it was like, whoa, it takes up, whatever. It's like 100 years for me to, get my investment back in dividends. Like, whoa, 100 years is a long time. But I would argue this is absolutely, I mean, at face value, this is much more absurd than that. So it's like, we've passed the Weimar in terms of crazy speculation. This is absolutely probably the most degenerate thing we have ever seen in financials markets ever. I mean, yes, the tulip mania was obviously absurd as well, but that didn't last that long, and there was at least only one tulip or one tulip mania. But now we have 5 million different cryptos, and jokes reach 70 billion. I mean, again, it's absolutely crazy. Well, who knows? Maybe the tulip mania actually was even more incredible in a sense. But for sure, this is. I mean, I don't think most people fully appreciate. Maybe even me, because we're getting so accustomed with it, because it's like it never ends. But when you think about it, this is absolutely grotesque. At $70 billion. It's like Fartcoin at $1 billion. If just that $1 billion in Fartcoin went in and bought, spread out the buying across all the TSXV juniors, maybe the sector would be up like 300% from just the money that's, let's say, in Fartcoin right now. I mean, that is so obscene and crazy, it's not even believable. The Dogecoin holders with their whatever they have now, 50 billion market cap, they could frigging corner the entire commodity space if they wanted to. It's like obviously somebody have to buy it off of them, otherwise the price was just kind of collapse. But if we're talking just pure monetary amounts and like the value, I mean, for 50 billion you could basically control the entire junior space, or like 90% of it. That is crazy. Then you would kind of have the world by the balls. But if you have 50 billion, if you own a bunch of Dogecoin, what do you actually control? Nothing. What's the actual value of what you're holding? Nothing. So it's just, again, when I see all of this, just makes me wanna. I mean, I have no idea what's going to happen in the future. I don't know where AI is going to take us. I don't know what's going to come after this. I mean, like I told someone today, it's like, I'm getting words. Like, what the hell comes after a mania like this? What does the future have in store for us? Because there's almost no chance something good is going to be at the end of this rainbow. Because this is so degenerate and perverse that it makes, the speculation during the Weimar Republic look kind of stale. But to me, it's like everything leads to commodities. I don't know exactly what commodities. I mean, I'm overweighted in gold and silver, but it's like, hey, AI, data centers, whatever. I mean, even crypto in a sense, because it also requires a huge amount of computing power. But it's like, okay, copper, whatever, nickel, it's like some rare earths, because it's getting, I mean, you see the heat up in terms of geopolitics, and with Greenland and China and yada yada. So it's like, everything I see just makes me more convinced that the only safe place out there is commodities. Because almost regardless of what the future is going to look like, Commodities should do very well. If this shit collapses, gold and silver, I mean, it's gonna probably go through the roof because everybody's so underweighted, partly thanks to crypto, of course, that they're gonna just go to the, I don't know, the moon basically. I mean, I read that 86% of the annual production of silver goes to industrial uses right now. So that's what, 14%. I'm not, if I'm not mistaken, I think that's what it said. So, and if that is correct, sure, there's obviously a huge amount of above ground silver, but still, 14% of the annual production is left over for investment purposes. And I don't think there's much interest from retail. I mean, we're really, really fringe. We've probably never been more fringe. The average fund manager or fund has probably never been more underexposed to gold and silver and all that. So it's like, to me, that looks like a market that is getting increasingly tight, increasingly sensitive. So what happens if this cryptomania implodes, inflation takes off, shit hits the fan, everybody's scrambling, everybody finally understands this crypto. It's like that was the, I mean, almost as big of a joke as NFTs and stuff like that, just a different form. So what happens when that, shit hits the fan and everybody's all of a sudden afraid that all the money they have in crypto is gonna go to zero, and they see gold and silver and real assets go up, and people pull out and want monetary metals, and there's only 14% of the annual supply that's left for investment purposes. Again, it's like the amounts that are right now in crypto. Imagine if whatever 10% of that went into silver, gold and silver. I mean, I don't think we can even believe those moves. And of course, when they see that, nothing drives sentiment like price. So when they see that ramping and let's say crypto crashing, they're just going to want to buy even more. So that's one angle I can see happening, and I think that's more of a question of when, not if. And I expect crypto to implode as well, but I don't know if we need. I don't know if we need crypto per se to be the trigger for everything, because the world is so effed up right now to begin with. But let's say we just kick the can and AI continues or some other new technology, and whatever, Bitcoin requires the entire energy generation of Europe or Germany, whatever. It's like everything else requires more power, automation, yada yada, digitalization, and it's like, okay, here comes the peak copper supply. I mean, like I talked about in a recent video, where it's like, okay, Glencore wants to merge with Tech, and I think somebody said that, no, it was, I think when BHP tried to buy Anglo, I think that there was Chinese that have a big stake in BHP or something like that, and they didn't want that to happen. So I don't know if that's from a strategic, like, no, we don't want a kind of Western entity to control that much copper output, whatever, because it lowers our strategic yada yada. But I bet that's that is what Glencore is thinking if they want to merge with Rio Tinto. They want to control strategic commodities going into a future where the strategic value and probably prices of said metals are going to go higher, and they are the biggest swinging in the world. I mean, that's got to bring a lot of power. So again, I have no idea exactly what's going to happen. I look at it from a game theory perspective, that I see no way that this cryptomania ends well, and when it ends, it probably might coincide with precious metals going a lot higher. If it doesn't end soon or whatever, it still doesn't really mean that much, because you can buy stuff super cheap out there anyway. I mean, literally, metals in the ground is the only thing, it seems, that have been in deflation over the last 4 years. So it's like that's the only place where our purchasing power has been going up. So it's like, thank you very much, I'll take some more of that. So what exactly is going to happen in the future, I don't know. I just know that every S&P 500 company requires metals, and every single crypto requires metals, and AI requires a huge amount of metals, etc., etc., etc. So it's like that's the winning ticket. I don't see any way out of it, but I don't know exactly when that's going to happen or what metal is going to go first. The way I see it, I want to be somewhat right than risk being exactly wrong. And that's what you're risking, obviously, when you go all in on a Trump coin or whatever. I mean, let's say the top for Trump coin was the top was in within 24 hours of its launch. That's certainly a possibility. So if you went all in, it's like, well, you're shit out of luck. Let's say it's down 50% from the top already, and it's never gonna go back there. That's a real problem. You were exactly wrong. Oh, and yeah, and then this, I mean, when I mean, I like to kind of watch some Sailor interviews because he says so much stuff that's like outrageous. And I've said this before. I don't like to be, let's say, the guy that pretends to be smarter than everyone else from the standpoint of like, oh, whatever, Elon Musk did this or some billionaire did that, and he lost money on it. It's like, what an idiot, meaning that's like, I'm smarter than him, so why am I not a billionaire? But at least with Sailor, I mean, there's some proof. I mean, he recently in the video I saw, he like again compared buying Bitcoin even now today. I think it was a relatively new interview. I'm not 100% sure, so it might be whatever. Bitcoin might have been at 70,000 when he said it. Whatever. I think it's a new video, and he's basically he went on about how he bought Facebook, Apple. Amazon, Google. Of course, he obviously just said the ones that went on to be huge winners, and it's like how much he actually made in those. Nobody knows, right? Um, and that's of course like in my case with junior investing. I mean, if you only talk, let's say, you pretend that hey, I was all only in the winners. I mean, that's obviously not the whole truth. And in that case, oh, okay, so you never have any losers. Like, I have a bunch of losers. Like, I had a troll remind me today that I was, I held Novo when Novo was $8. Novo is 9.5 cents today. So that's basically down 100%. That's from the top, it's basically wiped out. Of course, his comment were that I was, but I mean, like typically trolls do, uh, that makes it sound like I was hyper bullish at $8, and that's the only time I was hyper bullish. Not mentioning the fact that I started buying Novo at 50, 60 cents, went up to $8. I was still in it, and then I actually got increasingly bullish later on. When I started to understand what I thought they could have stumbled upon, let's say. But the point, and again with the asymmetrical risk reward, it's like, yes, if you have one whatever Snowline, if you have one Amazon, it's like it could pay for a huge amount, and the downside is always limited to 100%. But so he threw these stories out there, and it's like, well, if he literally bought all of them when they were hated, like he was talking about, why would you even need to go all in Bitcoin, if you know what I mean? Because I think the title was, or the one who put it up, and I think Sailor even said it. He said something, the simple way to get 10 to 100x your money is to buy cases, let's say asset companies, whatever, that cannot be stopped and are whatever hated, underfollowed, yada yada. So it's like, my point to that is like, okay, he tried obviously to make it sound like Bitcoin right now is like buying Apple, Amazon, Google, Facebook when they were hated and misunderstood or whatever, and only a genius would actually understand or see what they would become, which is kind of crazy when you think about it, because Hawk Tuah and Scottie Pippen or recently pumped the shit out of Bitcoin, or pumped the shit, but it's like they're long. So it's like, to me, it seems like everyone and their mother, especially dumb money, is in Bitcoin. So how that is akin to picking up Apple and Amazon near the lows, I have no idea. But obviously, it's not really supposed to make sense. It's just supposed to give people FOMO, so they buy Bitcoin up so he can leverage it more, so he can buy even more Bitcoin and just keep doing that thing. And the best part, again, I don't like to be like an armchair, throwing stones at whatever billionaires, let's say, but at least we have MicroStrategy to have as whatever proof of his, let's say, investing prowess. And this is the Nasdaq 100, and he's, I think, obviously a tech guy. So this is since 1997, I think. MicroStrategy, his company. Before 2024, MicroStrategy had underperformed Nasdaq since 2000. And that's what I responded to that video clip. Is like, he said, this is the easy way to make 10 to 100 times your money, and it's all in Bitcoin. And he talks about his great investments and how he can spot that, the Apple and whatever. I remember a clip seeing him talking about Apple and why he thinks that's gonna do well and all that. It's like, I'm not doubting that he's a smart guy, but it's like, again, look at his track record. I bought, let's say, Ivanhoe Mines in whatever it was, 2015. That went on, would have been I don't know, let's say 8-bagger today or somewhere along those lines. Like, I sold it though. So like, just because you bought something doesn't necessarily mean it's like, oh yeah, maybe Michael Saylor sold Apple after he was up 100%. It's like, I don't know. I just look at this chart from the top here to here, it was down 95%. So my response to him was like, or to the guy who posted that, it's like, did he just forget how to easily make 10 to 100x your money for 20 years? It's literally just here and there that MicroStrategy has overperformed Nasdaq in 27 years. So basically, only the last time and the only time before this now that he did it was during the biggest bubble in ages. The IT bubble, the Nasdaq bubble, the pet.com bubble. And now he just happens to be outperforming it again after 25 or 26 years of underperformance during a time when we see this shit. So I just find it funny. It's like, there is no evidence really that I can see. I don't know how much money he has. Maybe his personal portfolio has done great, whatever. But if you just look at his MicroStrategy, he's a crap investor that only outperforms during a bubble. Then and that just, lasts for what, 1 year. Then he blows up, and then he underperforms the index for 27 years. So if you just look at that, he's kind of a horrible investor that, let's say, gets lucky for a short period of time. Anyway, so that's why it's like, at least there's something to back this up, that, throwing some apples or stones at him, because it doesn't add up. Anyway, like this guy, today he's whining, but in a different way. It's infuriating feeling to try to make money the right way, only to be left behind by coins that are named after hand jobs, a president, and flatulence. you know, I've talked about this person before. I wouldn't say that he is like the most strict value investor or anything like that, but yes, okay. Compared to crypto, for example, anybody that owns anything else basically is more of a sensible investor, obviously. So, in relatively speaking, it's true. You're trying to do it the right way. And I just point out, and this is obviously for everybody listening. For example, I'm just trying to convey that uh, easy come, easy go. The question is how many can get out in time after all the easy money. When ICOs, that was initial coin offerings, were red hot. I talked to some who just bet on every coin. I mean, I literally remember that. It's like I was talking to a guy. He used to be in miners. Then he found crypto. I think he focused on that for a while. And I remember we chatting. This was maybe 2017 or something. And he's like, you got to get in to these ICOs. It's like printing money. And he had buddies that made millions of dollars pretty much and had made that in quite a short time frame. Basically, they signed up for these launches of new cryptos at whatever price. Let's say 2 cents per coin, and then they were released to the public, and they went up to, I don't know, 20 cents, somewhere along those lines. So like, okay, 10x, and then they sold and found another. So it's like they just kept betting on putting money into every new IPO or ICO as they were called, and all of them worked. All of them worked, and of course, the more they worked, the more they wanted to get into the next one. And that goes for everyone else. And the more people obviously wanted to buy them after they were launched as well, because after every ICO was released, they went up. So you don't even need to be really in the ICO, you just need to buy whatever coin that just was put on the market, and it would go up, let's say, 1,000%. So it's like it was the easiest money there is. Again, meme coins, shit that has no value, but it just went up. It's like printing money. Okay, I give you $1,000, you give me back 10. Then I put those 10 into a new ICO, and you give me 100, etc. So they just kept rolling it up. And then I remember the ICO craze kind of cratered. And then I talked to the guys like maybe a year later or something like that. And I'm like, hey, how's the ICO market? Because I didn't dare to touch that stuff. I didn't understand it. I was buying, juniors obviously. So I'm like, how's it going? And he's like, I mean, it's completely dead. And and he said that those, friends of his, let's say, that were up, millions of dollars. I think most of them went bust, basically. I'm not gonna say, totally, bankrupt and indebted, whatever, maybe, but like they gave everything back. Why wouldn't they? If you found your personal printing machine, etc., if you're up 10,000% in 3 months, and you can do no wrong, every ICO is a slam dunk, next one slam dunk, next one slam dunk. You're not gonna put put your foot on the brakes. You're gonna be hey, at this rate, my $3 million are gonna be worth $30 million if I just keep this up. That's the addictive nature of easy money. It feels so good. You're on a high. You start to again price in a future that isn't here yet. So you start to, and that's why we buy high in any stock, really. I mean, we just project the way that it has been going up, how easy it has been, and we just project that it's going to continue. It's going to continue. Why on earth would it change? Because I've seen this happen 15 times in a row where it's like I just made money. I can't miss. I can't miss. So yeah, I mean, most of them were broke. That goes back to the roulette analogy of going all in these shit coins or meme coins. That's like you have to be right every single time until the day you stop playing. And most people will not stop playing the better their start is. At the end of the day, all of this is going to go to zero one day. And I mean, his comment here, these are never meant to be held long term. I mean, I think most in the space know this. They bounce from hot coin to the next one, while other old ones burn out. I mean, it doesn't really matter, in my opinion. It's like everybody knows you should buy cheap and sell dear. Buy low, sell high. I mean, you and me probably are invested in, for example, gold miners, which is kind of the realest things there are, in a sense. I mean, it's the tier 0 asset, real stuff is in the ground, Mother Nature, made in a neutron star, whatever. Form of money for 5,000 years, yada. And again, it's not like buying low, selling high was invented today and we're the only ones that heard about it. Buy cheap, buy dear. No. But still, there's nobody buying cheap. That's my point. Everybody knows what you should do. And I bet a lot of people, in a sense, know that, I mean, have some inkling that this is absolutely crazy. But as long as it works, they can't help themselves. They will keep betting and keep betting and keep betting. That is why I've said before, that's like, I don't, again, in my opinion, it's like if you're a Bitcoin maximalist and you don't know how to invest, you're a one-trick pony. If Bitcoin goes up forever, you will do really well. If this ends up being a bubble, or at least stops going up all the friggin' time, you're shit out of luck. That was it. That was your one way to whatever you were gonna go. Sure, I mean, if you bought it 15 years ago, you already made a lot of money. But if you're still holding it, and you've looked right for 15 years straight on average, yes, there's been obviously 60, 70, 80% corrections and a lot of 50% corrections, etc. But for 15 years, let's say, it's still gone up. So you have a 15-year track record of, if I do nothing, Bitcoin is just gonna go up forever. How on earth do you convince a person like that who can point to, well, I've held it for 15 years, and 15 years later, I look right. Does he feel like he needs to learn investing? Does he feel the need to learn about how he should evaluate different companies in different sectors? Or is he just going to forget about everything and just be in Bitcoin? I would think he's just going to stay in Bitcoin, because that has worked. You get what I'm saying, I hope. I mean, again, it goes back to psychology. It doesn't matter what the right thing is, in a sense, because if nobody actually does it, everybody knows how to get in shape. Nobody gets in shape almost. Why? It's because it's hard. It's hard. It requires discipline. It requires a lot of sacrifice. So I mean, I think we're again. I don't think you can point to that. It's like, well, I think most people know it's, whatever, not here to stay. I don't see that playing that big of a part. I don't think people can help themselves. I don't think that. To me, it's just unacceptable risk. I mean, why would I go all in a shit coin? It's like, to me, I own. My portfolio is like, the holdings I have are like accidents waiting to happen to the upside, because they are that cheap. This sector is that cheap. The bull market is just a matter of when, not if. And the more I see of this stuff, the more I'm convinced it's going to be bigger than anybody could have even foreseen. Because that's, I mean, again, go back in history. biggest bubbles tends to be followed by the biggest crashes. The biggest bear markets tends to be followed by the biggest bull markets. And again, it's like what happened with gold after the Weimar Republic? Well, all your fiat in Reichsmark went to zero. So if you had a neighbor who had $2 billion in Reichsmark, so he was a billionaire, multi-billionaire, you had one gold coin. That other guy did not have one gold coin. When all was said and done, that guy had zero and you had a gold coin. So he went from being a billionaire and you only holding one, one gold coin. I don't know what the price of gold would be at whatever the beginning, leading up into the implosion. Well, let's say 500 Reichsmark. So you had a 500 Reichsmark at face value. He had 2 billion Reichsmark. At the end, you ended up being richer than him. Because you didn't lose anything. He lost everything. That's the thing. Again, it's not inconceivable that if somebody has if somebody owned all the Doge, or everybody, I was gonna say, yeah, okay, somebody has $70 billion in Doge or $50 billion in Doge. You have $10,000 or $1,000 in gold. It is not absolutely inconceivable that at the end of the day, you will have higher purchasing power than the guy with $70 billion right now worth of Doge, if he keeps holding it and it goes to zero. That is again, imagine if that happens. I'm not gold, at least in itself, is not it's a store of wealth. The way you, in a sense, win with gold is not because gold goes up so much in real terms, because it doesn't really go up that much in real terms. It's been basically stable in a sense for 5,000 years, and it tracks inflation. Now, the in a sense, opportunity in gold is that you don't lose when everybody else loses their shirts. In Weimar, you won by with owning gold just by not losing. And everybody who had Reichsmark, regardless of how much Reichsmark they had, regardless if they had 500 Reichsmark or $100 billion Reichsmark, at the end of the day, they had nothing left. It was wiped clean. All fiat wealth, in a sense, wiped clean. I'm simplifying it, of course. From what I heard from talking to a German was that mortgages, for example, they carried over into the new system and they were actually measured in gold. So if you had a mortgage in Reichsmark, that didn't get wiped clean. Because obviously if you had a 1 million Reichsmark mortgage and all of a sudden you went around with a wheelbarrow with 10 billion Reichsmark, you could pay off your mortgage like that. And basically everybody that had, all the banks, let's say, they would have nothing left, but because everybody would have paid it off. But that's not apparently what happened. No, it carried over to the new system and it was measured in gold. Basically, your mortgage, what it cost in gold before the inflationary collapse, in the new system with the Deutschmark, you kept the same mortgage, but transferred over to. So if you owed 10 ounces of gold, that was your mortgage in before the collapse. Whatever 10 ounces of gold cost in Deutschmark, that's what you owed in mortgage after the reset. The point is that if you had gold, yes, you would have, let's say, gotten all your fiat going up in smoke, and then I think there was like a new Deutschmark that were sent out to all families, whatever. So if you have a reset, obviously if you start with, if everybody gets 5,000 Deutschmark, all the people that only had the Reichsmark to begin with, they get wiped out, get 5,000 Deutschmark. But if you had 10 ounces of gold as well, obviously you have 5,000 Deutschmark, but you also have 10 ounces of gold, which might be worth 5,000 Deutschmark or something. In that case, obviously you are twice as wealthy as everyone else, simply because you didn't lose everything. You kept that gold going. So yeah, I mean, now it's obviously a rant again. Let's see, one more here maybe. Yeah, I mean, this is one thing to think about. It's like easy come, easy go. I've seen numbers up to 70%, but I didn't want to be too hyperbolic. There was some, I think I saw an article, it's like, that's not actually true. But at least I think this is the conservative number. That nearly 1/3 of lottery winners eventually go bankrupt within 3 to 5 years, which is more likely than the average American. Why is that kind of relevant? Because if you become a millionaire from winning the lottery, obviously you didn't have this, assuming you didn't have much money to begin with, you didn't get a million from your, let's say, skills and money creating skills or wealth management or investing prowess or anything like that. Somebody has handed you a bunch of money. You have no idea how to handle money because you have no money. If you knew how to handle money, you would have more money, right? So somebody just throws you money at you with no effort. Let's say like going in all in meme coin. No skills required, just obscene, in that case, risk taking. I mean, the funny thing is, buying a lottery ticket, at least you risk very little, but you gain a lot. You risk very little, but you can gain a lot. But somebody else throws money to you, not earned money, you just, in a sense, I mean, yes, one could say taking risk is obviously a skill as well, but not obscene risk, like meme coins going all in. So that says something, that I think that's even worse. I mean, if you're prepared to go all in on meme coins, that is like suicide. I mean, again, it's like, that is like, I'm gonna play the roulette table, I'm gonna put everything I have, and it better land on black, because otherwise I'm wiped out. So if you do that, that says something about how you manage money, obviously. That's why it's like, when you hear all these people, it's like, oh, that guy made $1 million or millions of dollars, he's all in. I mean, sure, there might be people with 100 million and they put 1 million into Trump coin and they make a shit ton of money. It's like, yeah, okay, but they still just, bet 1% of their portfolio. And obviously they're smart enough not to put their entire portfolio in Trump coin, and that's why they have 100 million, if you know what I mean. So, it's a chicken or the egg kind of situation. But if you have someone who's prepared to bet everything he has, like I showed last video, I think I showed a guy with 1 million in he was betting his life savings in Bitcoin because he thought it was going to become the world's most. No, I think he bet everything in MicroStrategy with our main man Michael Saylor, because he thought it was gonna. I mean, that's what he's doing now here. He's betting. He says he's put all his net worth in it, all his life savings. That says something, obviously, about that guy. And I don't know. I don't remember how many followers. Probably 100,000. No, it probably wasn't 100,000 followers actually. Maybe 7,000. Starter up, let's say. Still, that says everything. Do you think he's a good investor? Absolutely not. Do you think he thinks he's a good investor? Absolutely, 100%. Obviously, no sane investor would do such a bet. Put everything they can into a leverage company run by the guy that famously blew up in the last bubble. I mean, that's suicide. So even if he, let's say, makes money on that, I mean, he might end up. That might happen. MicroStrategy might end up being the most valuable company. that is still unforgivable risk taking. And so my point is to like, don't get too jealous about all this easy money flying around, because I can bet that almost everyone that, let's say, went all in on a meme coin, for example, and made a lot of money, or put any substantial in meme coins, they are basically gonna be broke one day, because they cannot help themselves. That's the same with poker players. There were a lot of people, let's say they were on a heater, meaning that they won a lot more hands than they should from a probabilistic standpoint. So whereas, I mean, I know one guy, I think he made $3.5 million when he should have won 800 million or something. Yeah, obscene, what do you call it? Like variance. It's like positive variance. So he was making way more money than he should be. I think that, but he was really a good player. He was a really good player. But that obviously led to some kind of ego, you know what I mean? That he thought he was better than he actually was, because his results were much better than they should be. And so he kept pushing that envelope because everything was easy for him. I mean, let's say he won two he won 2 of 3 hands when he should be winning 1 of 3 hands, for example. So it just was way too easy in a sense. Everything he did, I mean, I'm exaggerating, but it's like everything flowed, everything was easy, money came easy to him, yada yada. I think he ended up busting, and that's happened for a lot of poker players, and a lot of them have a very hard time to go down in stakes, to start over. No, most people keep pushing, especially the better it goes, they keep pushing. I mean, you can Google, or you can try to look up how many poker players that have went bust after making millions of dollars. Because like the only way you're not gonna go bust, for example, that is if you're really disciplined. But a lot of people, if they run their money up to $3 million and taken a lot of risk along the way, they will keep doing that. Because that's how they got the money in the first place, taking a lot of risk. So when they go to $3 million, they lose a bunch of money. Let's say they lose $1 million, they go down to 2. Now they're probably going to be tilted as well, because now they have even more to make. Now they have to make $1 million to even get back to the old high, all-time high. It's like with a stock, for example. Now it's like, oh, it's down 50%. It's got to go up 100% just to go back to even. So they keep taking risks. Sometimes, I mean, what typically happens is you actually take more risk when you can afford it less, because they want to make it back even quicker. So, okay, if you're playing whatever stakes and you're down, and now you're seeing it's like, oh, it's going to take 6 months at this rate, if I have to go down in stakes to have a hope of getting back to my old high. But if I go up, if I double the stakes, maybe I can do that in 3 months. That's the kind of thinking. And they go on tilt, all that. So a lot of people, they blow themselves up, especially after they have, had a good run, because they can't adjust when it goes the wrong way. And many people cannot. I mean, some really. I mean, some again, people actually go bust. I mean, they take it all the way to 0, and then it's very hard for people to come back. Because if you, let's say you played up to $5, $10 stakes, small blind $5, $10, or even higher than that. If you bust, and you have to start over with $1,000 or something, and start playing 10 cents, 25 cents. That's too much to bear. And you're like, you're reminded all the time. Like, I used to have whatever, it's like $500,000. Now I have $1,000. It's going to take ages to come back. You're going to get even more easily tilted. Because let's say you lose for a week or something at those, micro stakes. I mean, that's too much for most people to bear. So it's like, don't be too envious. I mean, easy come, easy go. When you see all these people, like right now, I retweeted something where it's like, I think it was that Pampliano guy who's like a crypto pumper, Bitcoin pumper. He's like, I mean, basically throwing shit at, Warren Buffett, that Berkshire is a meme coin and it's a boomer coin. I mean, it's crazy shit, but it's like, and somebody retweeted that and said, okay, this is where we are. We're in the crypto bros think they're smarter than Warren Buffett part of the cycle. So that's obviously like insane hubris. So you see that stuff again. Most people are really crap investors, really crap speculators, really crap traders. There are some who really have some good runs, but let's not forget that a lot of traders end up blowing themselves up. So if you're envious about money that's been made in crypto or Bitcoin or whatever, I mean, there is a non-zero chance that they will basically all go to zero one day. And I don't think a lot of people will be out when that happens. Because if you're a one-trick pony, that's the only way. If that's how you made your money, that's the only thing you know, you're gonna keep at it. Because that's the only thing you know. That's the only thing you know. If you made $10 million in shitcoins, meme coins, you have no idea about investing. I mean, the patience and all that, actually evaluating, yada yada. You only know how to trade trading sardines in a sense, and you were lucky to be in the, possibly the biggest bubble the world has ever seen. When the tide runs out, yeah, that's what I'm also a bit afraid of. Like, when this crypto shit busts, there's probably gonna be a lot of unfortunate souls out there. I prefer to, build your wealth on solid ground. What has worked throughout the entirety of history is sound investing. Sound investing doesn't mean your portfolio is gonna be up every year. Not in this sector, not even every 2 year or 3 year actually, unless you get very good at it. Still, that's a sound basis. Mining is not going away. Investing is not going away. That's a skill you can get better at until the day you die. And you don't need a bubble for that to work. But if you only know crypto, if you only made money in crypto, in possibly the biggest bubble the world has ever seen, when that part of history is closed, you might be broke, and you might need to go work at, whatever, McDonald's, or, start over, basically. So again, I'm saying it's like, I prefer to be somewhat right than risking being exactly wrong. Yeah, that's about it. Long rant. I do find myself bashing a lot of crypto and whatever, but I think it's, in a sense, copium. Because I think, obviously, when you see that Trump coin is up 7,000% and all that, and you see juniors lagging, it's obviously going to entice a lot of people to jump ship, sell low and buy high. I mean, buy crypto after obviously they've gone up so much, and sell miners after they've gotten cheaper for 4 or 5 years, and basically redo what probably got you into this sector in the first place. You bought, let's say, the highs of 2020, and then you sell the lows, and then you buy the next thing high, and it's like, you never break the cycle. But I will also say, it's like, of course, you do whatever you want. I have made no money in crypto at all. Absolutely no money. I haven't lost anything in it either. But I am obviously biased against, shit coins, meme coins, artificial stuff like this. So this is how I'm thinking about it, but it doesn't mean it's easy. Just because, I'm not going to buy crypto, that means I'm, you're gonna get guaranteed to win in juniors, for example, without doing any due diligence. This is not a free pass to, like, again, take the lazy way out, because it's like, even if this is the most undervalued sector there is, even if this is the most whatever inevitable, let's say, the sector with the most inevitable bull coming, let's say, that doesn't mean that you just, again, pack your shit up and, I can just buy, junior shit codes. And I've said this before. It's like, if you're just buying any shit co out there in the junior space, how is that better than buying any shit coin or meme coin? That's just pure gambling as well. It's just that, okay, it happens to be underpinned. But I mean, if a company is worthless, it's not really underpinned by anything. But yes, you are in a real asset space. But that doesn't mean that, every single company with gold and silver in its name is actually a good investment, or in a decent investment. A lot of them are actually poor investments. So it's like, it's no easy way, but that's the thing. This kind of, quote, free money that we're seeing flying around out there, that's gonna end. And when it does, I mean, that's what I'm more excited. I shouldn't say excited, more fearful of. What comes after this? Obviously we have never seen anything like this. I don't know what comes after this, but I bet it's gonna be chaotic. And I want to be in stuff that will do well in that environment. And I don't want to be in stuff that basically is worth zero, and it's just a matter of time when they go to zero. That's an accident waiting to happen. And of course, again, I'm not saying, you do what you want to do. If you think it's a good idea to bet on these meme coins, you're free to do that. I would never call a top in anything like this. I have no idea. I thought it was a pretty okay chance that Bitcoin would reach 100,000. I absolutely don't think it's gonna reach 1 million, but it could. It could, absolutely, it could. It's like, I don't have a crystal ball. So if you're really, whatever, good at trading or something like that, maybe meme coins is something for you. But it's like, for the love of God, at least realize that that's still the purest form of speculation and risk on you can literally do. Because let's face it, there's 5 million cryptos out there, and basically all are worthless at the end of the day, and are going to become worthless at the end of the day. So in the meantime, it's just a game of musical chairs in a sense. So I would recommend learning to invest, get better at investing, preferably every day, at least every week, and you're just going to become better and better and better and better, and that's thankfully a skill that you can use forever, regardless of there being a bubble in this or that and yada yada. Thanks for listening. I hope you didn't get too bored. Thanks for listening. No investing advice. Don't buy and sell stuff just because I buy or sell stuff. Don't invest money you cannot afford to lose. Again, I'm just airing my thoughts here. This is not a recommendation to short any crypto either or anything like that. I'm just airing my thoughts on the subject, and you don't need to do anything what I'm doing or not doing. Thanks for listening. Bye.